Right, this is the second part of the video on looking at final accounts and how to deal with the adjustments in final accounts. Last time we looked at the depreciation on fixtures in this ice cream cafe example, and the that was an on cost. Fixtures was on cost. Now we want to look at motor vehicles, where the reducing balance method is used. So it's 25% reducing balance. Now there's only one difference between the two methods of depreciation, and that is the way of calculating the depreciation for the current year. So if we just look at motor vehicles up in the trial balance, we can see the motor vehicles, the original cost here was 56,704. And we can see that the provision for depreciation on motor vehicles, 20,041 here. That's the depreciation up to the start of the current year, so up to the start of 2005. So the assets at the beginning of 2005 would have been worth 56,704 minus the 20,000. That's what they would have been worth at the beginning. Now that is called the reduced balance. The value at the beginning of the year, and when it's reducing balance method, we calculate the depreciation for the current year on that reduced balance, on the value that we thought they were at the beginning of the year. So all we've got to do for the current year's depreciation is take 25% of the reduced balance, so it's 25% of 56,000 minus the 20,000 provision. So we do that 25%, and we can see if we just go down now to the profit and loss account, we can see that the depreciation on motors is 9,161. That's 25% of the reduced balance, 56,000 minus the 20,000. Give or take a few pounds. Okay, that's the depreciation for the year. Now in the balance sheet, we also have to put the value of the assets now as at the end of 2005. So we've got the balance sheet here, there's the motor vehicles, original cost 56,000, and now depreciation to date is the 20,000 that we had in as a provision in the trial balance. That was, remember, the depreciation up to the beginning of this current year, and we've got to add to that the £9,000, 9,000 and a bit pounds that was the depreciation for this current year. So that 29,000 is the provision that's shown in the trial balance plus the depreciation that we've calculated for this current year. So this is the same system as for the fixtures really. So our net book value, NBV, net book value, is 56,000 original cost minus the accumulated depreciation, 29,000, gives a net book value of £27,000. That is the way to do the depreciation when it's a reducing balance method. Okay, so that's all for now. In the video 3, I'll look at the bad debts and provision for doubtful debts. Thank you, bye.